Hello and welcome to the preview for the Bank of England's quarterly inflation report. So that report is due to be released on the 12th of February, so that's Thursday, at 10:30 London time. So just to quickly recap what we saw from the previous report back in November, so one of the main takeaways was that the Bank of England expected inflation to dip below 1% within the next 6 months. However, if we do look at now, current UK year-on-year CPI stands at 0.5%, so quite a way below that 1% threshold that they did warn could be crossed. So subsequently, this is very much expected to be filtered through into this week's report, whereby the BoE are expected to slash their CPI forecasts for 2015, and also potentially warn that UK inflation could enter deflationary territory this year. However, given that the recent slide that we have seen in oil prices, should the BoE downgrade their inflation forecast to be relatively pessimistic, this isn't going to be too much of a surprise for markets. So however, then just looking at some of the other things we can expect, some analysts suggest that the release could actually take more of a hawkish stance than expected. So just with regards to the falling oil prices, which have subsequently hampered inflation expectations, analysts suggest this could actually be a benefit according to the BoE. So therefore, we could subsequently see the BoE upgrade their growth estimates from 2.9% for 2015 to 3%, adding that the low oil prices could be a form of stimulus for the UK economy. And furthermore, an interesting one we saw earlier in the week from analysts at Goldman Sachs. They see the BoE may actually be a bit more optimistic on the path for UK inflation, saying that the BoE may say that they expect to return to the 2% inflation level sooner than expected, as released in the November readings. Could be something to watch out for there. And finally, it is also worth noting with regards to inflation that BoE's Carney has said that it does affect some of the move lower in CPI readings to be somewhat of a more transitory move. So it could be interesting to see how he does view the future path of UK inflation longer down the line. And furthermore, one thing which may actually provide UK asset classes with some reprieve despite the lower headlines expected for the CPI outlook, it could be with regards to wage growth. So one of the key metrics looked at by the Bank of England is slack in the economy. Well, there is no direct way to be able to quantify slack in the economy. However, wage growth is seen as very much quite a good proxy for the metric. And on that subject, BoE Governor Carney has recently said that he is beginning to see a bit of a pickup in UK wages. So it's possible we could actually see some optimism here from the BoE. So just to recap, some of the main takeaways we're expecting to see the BoE downgrade their inflation forecast, upgrade growth, and possibly be optimistic about slack in the economy. And just in terms of how the reports actually release, so at 10:30 London time, the full reports will hit the newswires, and that will be covered in full on this RANsquawk. And then after this, we'll also see a kind of ECB style press conference held by BoE's Carney. And interestingly, this time around, given that inflation is now 0.5% and below that 1% level, we'll also see an open letter by the BoE explaining to UK Chancellor Osborne how UK inflation slips between that 1 to 3% band. And we'll also see how the BoE also intends on how to get UK inflation back on track. But this letter is a bit more of a formality. So that's all from me, and good luck.